When I first started calling for $5,000 gold, it was maybe about 1,500. Took longer than I thought to get there, but it did get there. But now I think prices are going to head much higher. I mean, something like 20,000, would be, oh, that's crazy, because at least that's way above where we are. But I think that's certainly something that might happen given the trajectory.
Good afternoon, everybody, and happy Thursday. My name is Gav Blaxberg. I'm the CEO at Wolf Financial, and legendary investor Peter Schiff is joining me once again on the show to talk about this incredible move that we are seeing in gold, silver, precious metals, and perhaps the downfall of the dollar and another currency out there that people point to pretty often. Peter, welcome to the show.
Oh, thanks for having me on.
All right, so let's talk about it. Last time you were on, gold was traversing in between that 3 to 4K area. Silver, probably around $50 at the time. I don't think anyone was even talking about silver yet. And the move has been momentous. They have skyrocketed to the upside. Gold nearly touched 6,000 spot price, and silver, we were up over, I think, 120, 130 at one point. They've receded a little bit back, but they're holding still pretty nicely. Gold right around 4,900. Silver, I think, around the 75-80 mark. What do you make of this spring-loaded move that has occurred over the last few months?
Well, there was a lot of, I guess, speculation that finally came into the silver market. I think after it kind of broke through the 50 resistance area, the move from maybe 80 up to 120 was very swift. And then it had an even swifter pullback, down to the mid-70s. So it was very sharp, basically happened in one day, but then it's been volatile. It's getting hammered again today. But I think a lot of this is just noise. I think the market has clearly broken out after decades of consolidation. And I think we're headed to much higher prices over time. Same for gold. I mean, gold hasn't had nearly as much volatility because gold has had a more linear path. It's been gradually rising over the years, while silver kind of went sideways. And so then silver had to catch up, and it kind of caught up and then overtook gold. And so now it's kind of probably back in line.
Yeah, both of them, have had big moves up and pulled a little bit back here, but I think that we're looking for continuous upside. One thing that you've been saying really for decades at this point is that gold is the market's lie detector. And now we're seeing $100, $200 daily moves in gold, silver, silver hitting triple digits, and central banks dumping dollars as well. Do you think that kind of the lie is finally being exposed? And what does this move tell us about the central banks?
Yeah, I think it's pretty clear that it's telling us that central banks have lost confidence in the dollar, in the U.S. government's commitment to maintaining its value and getting a handle on its fiscal house. And I think they've made a decision to move on. And they're clearly moving to gold. That is the replacement reserve asset for the dollar. It's gold. And that's why they've been buying it. That's why they're going to keep buying it. And I think this is a significant game changer for the global economy, most importantly for the United States.
Okay. Can you elaborate a little bit further on that? Because one thing that we've been seeing in the past year is international exposure has actually been doing quite well, sometimes outperforming what's happening in the United States. And the United States, when you look at the stock market, is very concentrated into specific stocks as well. So how do you think that bodes for the next upcoming years here? And do you think that we need to go through a period of consolidation in gold, or is it just continuing the move because they're just going to keep stacking it?
Well, I think gold's going to keep moving, and I think that you're going to see a continued exodus of capital out of U.S. financial assets. So you're going to see that underperformance of U.S. stocks relative to global markets. And I think you're going to see the same thing in economic performance and living standards. I think the U.S. is going to suffer during this transition, and I think the rest of the world will prosper because they no longer have the burden of subsidizing our economy. We lose the benefit of that subsidy, but they lose the burden of having to provide it.
Right, with the downfall of the dollar. And just transitioning a little bit, so staying within this gold theme, one thing that we talked about last time, and you mentioned that there's a decent chunk of your portfolio that's in the mining area, right? In gold miners. And is that mostly in large cap miners, or are you also playing in juniors, exploration area?
Well, I have both. I mean, most of the money is in the larger companies, but I have a lot of exposure in the smaller ones as well.
Do you think that there's a catch-up trade to be made there? I was talking with another person who's very knowledgeable in this gold area, and they actually think that gold could keep going in this area, but they believe that most of those miners and exploration firms have not been properly re-rated with this surge that gold had, and that they're still valuating it like gold's at 3.5K.
Yeah, well, not even that high. I think that the whole sector is undervalued, and maybe Wall Street will start crunching the numbers again after the next quarterly earnings come out, so much better than what had been expected. Maybe they'll start raising guidance, but even the companies are reluctant to base their guidance on these numbers. So they take a more conservative approach that the prices are not going to hold up. Everybody expects the prices to come down. Not only are they not going to come down, but they're going to keep going up. So the stocks are significantly mispriced. And I think the juniors are mispriced relative to the majors. We have a nice exposure at my gold fund. So a great way to get into it now and to get exposure to those small stocks is by buying my gold fund with Euro Pacific Gold Fund. The no-load symbol is EPGIX. You can buy that at any discount broker, or just go to my website at europac.com. You can buy it there, or you can talk with our representatives. Not only can you buy the funds through us, but we do have separately managed accounts. If you don't want to be in a fund, we manage portfolios that are, precious metals mining portfolios. We also manage broader portfolios that seek out growth and income in other stocks. But we do have specialized strategies specifically for the miners.
Yeah, I'm glad that you mentioned the precious metals there as well as part of that strategy, because it seems like there's two different sides to this, right? Within the gold area specifically, most people targeting gold as a store of value, right, and an asset here that could replace something like the dollar. But then you have some of these precious metals, platinum, copper, et cetera. And we talked briefly before this, and you mentioned the inflation thematic, but also the demand for them, right? As you have AI data centers built, electric vehicle mandates. Do you pay attention to much of that when it comes to the rare earth and metal side of things?
Pay attention to what?
Basically just the increase in demand that we're going to see for.
Oh, yeah. I mean, certainly with respect, look, you look at what's happening with silver demand for batteries, AI generating demand. So, yeah, I mean, demand is a big part of price. And a lot of the demand, of course, is byproduct of inflation. But then you've got the supply constraints. There's a limit to how much silver can be mined. So metals are a lot different, let's say like agriculture. If soybean prices go way up, farmers can stop farming corn or wheat and plant more soybeans, right? And try to increase the supply of soybeans. But if there's a big increase in the demand for silver, they just can't start pumping out more silver. I mean, if they would already be mining it if they had it. So it's going to take a long time and much higher prices for the market to respond to higher prices with additional supply. Yeah.
How do you intrinsically think differently about gold versus silver and where they fit into a portfolio?
Well, I think, silver is going to be more influenced by the industrial use because it's used more in industry than gold. Not gold could be used more if the price wasn't so high. But because the price is so high, it's used very sparingly. I mean, the main industry obviously is jewelry. But there are a lot of other applications where gold would do a very good job, but it's just too expensive. So they use silver, copper, or some other metal. Gold is more of the pure monetary metal. I mean, it's the metal that the central banks are holding.
Right.
That's why, for example, like silver's down 12% today with this margin call related liquidation, but gold's only down 2%, right? So gold is a lot less volatile.
So speaking of some comparisons of different currencies, something you've been speaking a lot about on the timeline is Bitcoin. Also a lot of MSTR as well has been coming into there. I actually looked from the all-time high movement pretty much at about 123 to 126. From that point, they basically actually mirrored each other's moves in the opposite direction. Gold had essentially a 40% run to the upside, and Bitcoin had basically the same move to the downside. And then, of course, now gold has pulled back a little bit, and Bitcoin's continued to pull back in that area. You are no stranger to sharing your thoughts on this online. Curious if you want to share it a little deeper here.
Yeah, well, strategy is down 80% from its peak price. But what's probably more significant is strategy has spent the last 5 years buying Bitcoin. They have spent about $54 billion buying Bitcoin. And the Bitcoin that they own is now worth about 13% less than what they paid. That is the horrible investment result for 5 years of buying. And the losses just keep piling up now, especially if they keep buying Bitcoin, which they seem to do every week. So that really shows you, because the reason that strategy was able to raise so much money to buy Bitcoin was because the people who were buying strategy stock wanted exposure to Bitcoin because they thought it would have this great return. And they were wrong. The return on Bitcoin has been lousy the entire time people were buying MicroStrategy. Now, MicroStrategy stock is still way up since they started buying Bitcoin because they've been able to create so many shares and use it to purchase assets that still have value. So that's what's propping up the price of strategy stock. But as the air comes out of the Bitcoin bubble, it comes right out of the strategy bubble too. And strategy ultimately is going to trade at a very significant discount to its Bitcoin. So there's a lot of downside risk in strategy right now, even more so than there is in Bitcoin.
Interesting. Okay, so you see it as much more risky than just owning the asset directly, even though it has some of those assets that they've purchased.
Well, I think strategy has more downside and less upside than Bitcoin. So, but yeah, there's just no viable reason to own it.
Understood. Yeah, I think it's a really interesting story right now. You kind of get two sides of the party: those that have been calling for the demise and are looking at going down, and then the people who say, we're going to buy it cheaper, right? And Mike Saylor, definitely one of those. So I'm intrigued to see how it plays out.
Cheaper? I mean, what are you buying when you buy strategy?
Or directly to the asset of Bitcoin.
But strategy has all kinds of debt now, and they have these preferreds where they're paying 11.25% interest. Where they get that money? So they're just paying out interest. And they have massive now unrealized losses. They're down 13% on $55 billion. That's over $6 billion of unrealized losses on the books.
Yeah, I think that is a good point necessarily to focus on in terms of debt and some of those pieces. And, one of the things that I was thinking about and I was curious to ask you about is, have you seen, there's a lot of companies in this gold space, and you obviously have your firm as well, and continuing to buy in these funds. Do you think that there's any cross comparisons between the strategy that was implemented on MSTR, but for Bitcoin, but people are doing it in the gold space and doing it well?
Well, there's nothing to do in the gold space. I mean, there are gold ETFs already, but I don't see there's like a gold treasury company that says, hey, we're going to start a business and our business is just to buy gold. I mean, that's not a business. I mean, anybody could just buy gold. The point of the ETFs is just that they store it for you. They make it more convenient to buy gold. But, I don't know. Nobody would do in the gold space what strategy did in the Bitcoin space. And the whole thing that made this crazy scheme seem viable was that the market at the time was willing to assign a premium to a company that decided they were going to be a Bitcoin treasury company. And so that's what made the whole thing possible, because if your stock is going to trade at a 50% premium to your Bitcoin, you just keep issuing shares and buying Bitcoin. And you end up getting, all this free Bitcoin because you sold $1 worth of stock and you ended up with $1.50 worth of Bitcoin. You got 50 cents for nothing. But eventually that 50 cents is going to be nothing because Bitcoin is going to be worthless.
So no rise in the, not the DATs, but the GTSs, the gold treasury companies. You think it's safe to say that that's not exactly an area? Or do you think that corporations could start adding more gold to their balance sheet, seeing what central banks are doing?
Corporations, I believe, should keep gold on the balance sheet as opposed to keeping dollars. I think it's a better store of value. So I think, companies that have a large, cash position should think about diversifying that. I mean, either paid out in dividends, buy back stock, but, why leave it in cash with inflation eroding away the value? Much better to just hold it in gold. But it made no sense for any company to hold their cash in Bitcoin. I mean, that's just like gambling, taking it to a casino. What would be the point of doing that? I think that's reckless, disregard for your duty to shareholders to take, your corporate treasury money and gamble it on Bitcoin.
Double tapping a little bit into the central banks, do you think that because part of it, from my understanding, is a no vote in the dollar, and part of it is diversification, right? I think that it's smart of them to have some diversification there. Do you think it's 90% a no vote in the dollar, 10% diversification, or that it's a more even split?
Between what?
For central banks that are basically exchanging out the dollar for gold.
Well, I mean, I just think it's a transition that they're making. It's just going to be ongoing. I think ultimately, central banks would like to have no dollars and just gold, but it's just taking time to make the shift.
Understood. And as you look at that shift, what do you think could potentially accelerate it this year? Do you look at what Trump is saying, some of the geopolitical items, different pieces like that?
Well, I think, our monetary policy may accelerate it. We go back to QE in a bigger way, more rate cuts. The U.S. gets into recession. Our budget deficits get bigger. All that, I think, would accelerate the flight from the dollar.
Yeah. I mean, what about, and this is getting a little bit more into the geopolitical items, but, there's a lot of talk with Greenland and Denmark and what happened with Venezuela and pieces like that. Do you think that these are all things that the instability continues to accelerate? Because I've looked, a lot recently, and on days when things are happening in the market, Trump is throwing out crazy tweets, you will see those metals holding up nicely.
Yeah, well, I think all of those things added to the concerns that the world has, probably especially the Greenland stuff, where obviously Greenland is not doing anything wrong. They're not criminals. It's not a situation that's anywhere analogous to Venezuela. And for Trump to just say, we're going to invade, we're going to use the military to annex Greenland and make it part of the United States, whether the Greenlanders want it or not, because there's nothing that anybody can do about it, because we're the toughest kids on the block, right? And we do what we want. I don't think that resonated well with our allies, who, for the first time, may have feared the United States, where in the past they thought that the U.S. would only use its military to defend their interests, not to attack them. And they start to think that they've created a monster here and they need to do something about disarming us. And the main reason that we can afford this big military is because the world finances it for us. They enable it. If we had to fund our own deficits domestically, we'd have to massively cut spending, including military spending. And so I think the world might be thinking that we're getting too big for our britches here. And, they need to do something about that.
Very interesting. So a bit of a self-fulfilling prophecy for gold in these areas, right? You kind of trigger the world. Now they're less inclined to buy your bonds, hold your dollar as reserve currency, exchange it out. What are they else going to put it into? The natural move that they go to is gold, right? Because they're not going to start buying the yen, right? And other pieces like that to hold, right?
Yeah, and I think that's the mistake a lot of people made when they just assumed that the dollar's status as the reserve currency was, here to stay, because they assumed that there was no alternative to the dollar. They said, look, we're the cleanest dirty shirt in the hamper. So they're stuck with us. And they never looked outside the currency hamper. That was the problem. I kept saying, wait a minute, there's gold. Gold is not a dirty shirt in a hamper. Gold is pristine. It's outside the hamper. It's real money. And gold was always the most viable and likely alternative to the dollar. And the reason that the dollar could be replaced, because the world has something better than the dollar, and that's gold.
So speaking of gold here, let's talk about the trajectory. I think often on the timeline, you've talked about, gold to 10K. I think there's even been quotes of gold to 100K, right? And what could happen here. As you look at it, from an analyst perspective, how do you continue to understand the valuation of it, right? Gold at one point this year was up $6 trillion in market cap. It was up more in market cap than any publicly traded company in the world total market cap. A move like that is pretty wild. And for gold, you're seeing, I think it was Morgan Stanley came out, right, and talked about gold to 8,000. These are wild valuations. How does it stack and actually get there step by step?
Well, 8,000 is not wild. We were not that far below 6,000. When I first started calling for $5,000 gold, it was maybe about 1,500. Took longer than I thought to get there. Yeah, but it did get there. But now I think prices are going to head much higher. Something like 20,000, would be, oh, that's crazy. Because at least that's way above where we are. But I think that's certainly something that might happen, given the trajectory that I see us on as far as debt and inflation and where the price of gold would need to be, given that. But, Wall Street is finally starting to notice that over the past 26, 27 years, people are better off in gold than the S&P 500. And so that tells you something.
When you talk about Wall Street starting to notice, you're obviously in the center of this. You shouted out earlier your company. You have gold funds. You sell gold, right? Are you conversing with people that are in these funds? Have you gotten a lot more outreach, people wanting to pick your brain? Hey, maybe we shouldn't be holding this in U.S. Treasuries.
Yeah, the inflows have now picked up. We're getting more customers. We're getting more inflows into the funds, more clients at Your Pacific Asset Management. That's great. I wish we got more a year or two ago when it was an even better time to buy. That's when people were trying to pull their money out. They got very optimistic when Trump won the election. And I tried to warn people that they were wrong about that Trump would be bad for the dollar, that his policies would undermine the economy. Not that I thought Harris's would improve the economy, but I knew that Trump wouldn't either. But a lot of people had a lot of false optimism, particularly Republicans, about what Trump would accomplish. But now people are starting to realize that I was right. And so, we're getting more accounts, which is great because everybody who's opening up an account with me, I think, is going to be in good shape. They're protecting their wealth. They'll even profit from the events that are going to be transpiring.
So gold at 20,000. So what would gold's market cap be at 20,000? Probably.
I guess 4 times what it is now. So
yeah, I've got to look up. Gold market cap at 20K, just to kind of put it in perspective for those that are thinking about this, because it is quite the move. Even though it did move at 1.6 trillion this year.
Yeah, but you got to remember too, everything else is going to go up in price. It's not like just gold's going to do that in a vacuum. You're going to see prices go up. It's a lot of inflation that drives gold up to 20,000.
That would be $140 to $150 trillion market cap based on the calculations that I'm looking at. So talk about everything else going up. So you think it's a simultaneous move of both the stock market as well as gold, but gold
it's a move down in the dollar. Gold's just staying there. The dollar is what's going down, right? You used to need just $20 to buy an ounce of gold. Up until 1933, you could buy an ounce of gold for $20. And then up until 1970, you could buy an ounce of gold for $35. Now you need $5,000. the gold hasn't changed. It's exactly the same as it was in 1970 or 1933 or whenever. All that's changed is the dollar. The dollar buys a lot less today than it did back then. So, 1970, you only need $35 to buy an ounce of gold. Now you need $5,000. It's the dollar that's losing value. Gold's not becoming more expensive. It just means that the dollar has a lot less purchasing power, so you need a lot more of them to buy the same ounce.
So talking to the dollar, how much farther and how much faster do you think that the dollar can depreciate, and why?
It can depreciate a lot faster and a lot farther. I mean, it's just a paper currency. Its value is a function of confidence, and confidence can be lost very quickly. That's one of the main problems with fiat currencies. The dollar index recently hit a 4-year low, bounced a little bit. The dollar hit a record low against the Swiss franc. So that's a sign that it's going lower. But we haven't had a real dollar crisis yet. I think that's coming. I think gold is just an earlier warning sign that that's coming.
What would be additional warning signs beyond gold for people to kind of stack for confluence that there's a real move to the downside there happening?
Well, I think the next warning will probably come in the dollar itself, in the foreign exchange markets or the bond market, and ultimately in both. And in the bond market, I mean bond prices falling, long-term rates rising. Their rates are down today because I guess there's a little bit of a move to bonds because everything is crashing.
Sure.
Yeah.
Yeah. The market definitely stays interesting. So it's good thoughts there. And I honestly, with Trump, I'm not even sure Trump necessarily wants a strong dollar right now. I'm not sure that that's the best things for his policies. He says he wants it, right? But then it doesn't get reflected in his actions, which I think you've pretty much outlined.
Well, his policies are harmful to the economy. No matter how you look at it. He obviously needs a strong dollar because he needs somebody to buy our bonds. And they're not going to buy our bonds if we have a weak dollar. They're going to sell our bonds.
Right, but the policies aren't reflecting it. And then the one other piece I was going to ask on top of that
is he wants interest rates down, which is going to weaken the dollar, right? So that's,
Do you think Kevin Warsh will cut interest rates?
Of course, otherwise he wouldn't get the job. That's why he's got to nominate it. He's got his marching orders.
What do you think of this commingling between presidential figures and Fed chairman?
Well, I don't like it. I don't like the Fed anyway, but to the extent we have a Fed, it should be as independent as possible from the executive branch or the Congress. I don't like them all being buddy-buddy.
Do you think that the Warsh pick was strategic because people looked at it and said, hey, well, this guy was, a hawk in the past, right? And some of the ways that he went about things.
I think that's why they nominated him, because of the perception that he's going to be independent, that he's a hawk. So when he cuts rates, it'll be more believable that maybe it was justified, as opposed to politically motivated.
Yeah, he must have really thought it through, right? He must have really looked at the data.
But no, the markets, maybe got fooled by that, but that didn't fool me.
Understood. So then just kind of like my last thoughts here. Gold had a big move recently. We talked about potentially, where it can move to 20,000. The timeline, like you mentioned prior, you were calling for 5,000 gold to 1,500. Took longer than you thought. But we are escalating here. Do you have any thoughts timeline-wise on continued escalation? Do you think it'd be necessarily a bad thing if gold sat again for a year and continue to have a consolidation move before another move up? Or is that just being truly expedited by this downfall of the dollar and this loss of confidence?
Yeah, I don't think it's going to go sideways for a year here. I think it's going to keep rising. But it would allow my clients to get more of it if that were the case. We're going to buy it, regardless, but, it's always better to buy it at a lower price if you can.
The win-win strategy right there. Yeah. And having the true confidence, right, is what actually builds it. When you have conviction in the asset, the asset going down is not necessarily a bad thing, but you believe that it will continue to rise to the top. Okay. Really great thoughts. Peter, I always enjoy spending time with you and talking. You give me a lot of conviction. Trust me, I bought a lot more gold after our last live stream, and it worked out pretty well for me.
All right. Well, that's good. Good for you. Did you sell Bitcoin to get it?
I probably should have. I did not.
Of course,
I did
I mean, not you probably should have. You should have.
I did. I used the U.S. dollar though. I got rid of some of my U.S. dollars.
Well, it's not too late. You can go to Schiff Gold, and you could pay with Bitcoin using BitPay.
Oh, interesting.
So,
when did that get integrated?
Silver's down as much as Bitcoin today, even more. So you could sell some Bitcoin and buy silver, and you're a winner on the day.
There you go. Arbitrage opportunities. I have to see what I'll do with my Bitcoin, but I'm certainly stacking my gold. I'm excited. I think the thesis is very straightforward and understandable, and you can see with the policies and the confidence piece that you outlined. That was a great analysis there on Venezuela to Greenland and some of those different pieces and how they affect around the world. A couple good shout outs there. I encourage everyone to check out your site and your funds. Any last thoughts you want to share on this one?
No, just, remember to listen to my podcast, Schiff Radio, and my YouTube channel. Follow me on X. Check out my funds at Europac.com and get yourself some gold at Schiff Gold.
Check it out. Grab some gold. Nothing like some physical gold. I've got a safe on the way here, actually, next week to Puerto Rico, shipping over. So then I'll have to reach out. I actually want to maybe stack some physical bars. Right now, I'm an ETF guy. Thank you so much, Peter. Thank you to everyone that watched. This was on X Live. This will be up on YouTube shortly. Take care, everybody. Have a great rest of your day.